So my screen visible.
Yes.
Good morning, everyone. Thank you to the group for giving this opportunity. Today we are discussing on this topic of impact of GST on sale or return of expired medicine. Okay. So there is a circular 72 by 46. It was issued in 2018, and this circular instructed that if a dealer have a stock of medicines which is expired, that goods can be returned to the manufacturer. Option one, through a invoice, sale invoice. Option two, through a credit note. In the circular, it is mentioned that if it is done through a sale invoice, then the manufacturer is supposed to reverse the credit of the amount of the invoice. The manufacturer is required to reverse the credit mentioned in the invoice issued by the dealer, right? And now here we have 2 points to discuss. First, what if the dealer sends the goods after the time limit given in the law, uh, that is after 30 September, and if they don't want to, or 30 November, right? And if they don't want to go with the tax invoice route, they don't want to inflate their sales, and they want to go to the credit note route, but since the time limit have crossed, then they will go with the route of financial credit note. So in the entire presentation, we are hereby required to discuss two points. Number one, whether ITC is to be reversed at all. Number two, is there any undue advantage in the entire supply chain? So, what I've tried to do is there's a chain from manufacturer to a retailer. A manufacturer selling a commodity, medicine, plus GST to a distributor. Similarly, distributor adding a margin, selling it to wholesaler, and further wholesaler adding a margin, selling it to retailer. So in this scenario, first situation would be number one, where a manufacturer is selling to a distributor normal invoice, and when the goods are expired, distributor is returning to the manufacturer on a tax invoice. Then that attracts no discussion. That is completely fine. Situation two, when a manufacturer sold goods to distributor, and subsequently when distributor send the goods, expired goods, to a manufacturer within a prescribed time, then it is done via GST credit note. Then also it is not an issue. The scenario I'm discussing is where now we'll go to the figures also. If you can see the figures, the manufacturer has invoiced to the distributor, let's say in 194.14. I'm just using actual figures. The whole agenda is, in this, by end of this scenario, we'll understand that there is a accumulation of ITC on the last leg, that is on the retailer, and there's an excess payment of ITC tax on the hands of manufacturer might be. So in this scenario, if you see, the manufacturer have sold goods to distributor, distributor further sell goods to wholesaler, and wholesaler to retailer. Now the retailer declares that the goods are about to expire or haven't expired. Retailer, let's say after 2 years, returns the goods to wholesaler. Now wholesaler gives the retailer a simple financial credit note. Now, friends, in this industry, when we spoke to the market and everything, what we have practically saw that wholesaler has given the goods to retailer at, let's say, 500 rupees plus GST of 90 rupees. So when the goods are returned by the retailer, wholesaler gives a credit note, a financial credit note of 590, not of 500 rupees. I'm repeating this point. When the wholesaler gets the goods returned by the retailer, wholesaler is supposed to issue a financial credit note of 500 rupees. But in this industry, they have a normal practice of issuing a financial credit note of 590 rupees. In the books of accounts of retailer, the purchase was of 500 rupees, but when the goods were returned to the wholesaler, it was returned at 590 rupees. Now, leading to this, when the wholesaler returned goods back to the distributor also only reimburses the financial credit note. What it means, distributor also gives a financial credit note of 590 rupees to the wholesaler. And similarly, when that good is given to the manufacturer, then the manufacturer also gives a financial credit note of 590 only to the distributor. So the entire chain exchanged the financial credit note of the amount which was paid by the retailer, the last leg. In this scenario, what we understood is that the retailer, when purchased the goods, have taken a ITC of 90 rupees and had a commodity of 500 rupees. But after 2 years, when he received a financial credit note and he gave the goods back, he is not supposed to reverse the credit. So he is also enjoying the benefit of 90 rupees ITC in his credit ledger, and there's a profit of 90 rupees also in the books of accounts. So a lot of ITC is getting accumulated in the retailer segment of the pharma industry because of this. When we get deep into it, the manufacturer is of an impression that since we did this, the manufacturers are in an impression that since we did this, since we reimbursed the exact amount in the financial credit note, we are not now supposed to reverse the credit. They are in understanding that they are not required to reverse the credit of the expired goods, which is coming back to them through the entire chain. So this is one point I wanted to highlight, that this is a practical scenario happening in the market in which the manufacturer is ending up paying excess GST amount, and the unnecessary profit and extra GST ITC is getting accumulated in the hands of retailer, right? So this is one point which I wanted to highlight. I will go to the second point and discuss this. Anyone have any confusion on the facts? Then I can share it again.
Abhishek,
Yes, sir.
see, the ITC accumulation can happen only if my sales return is higher than the credit note and the sales return after 30th November.
Right, sir.
Correct? So
Right, sir.
otherwise, there cannot be accumulation of credit.
Right. So practically, the medicines are manufactured with a 3 years life, and the last leg only send it back after 2.5 or 2 years.
Right.
So in the given scenario, let's say wholesaler gave the retailer at 500 rupees. Now
Right.
plus 90 rupees. Now retailer wants to return the goods. When the goods are returned, wholesaler is giving a financial credit note of 590 rupees.
Okay.
Not 500 rupees. This was, sir, I practically personally checked 7 to 8 cases.
Okay.
So to name it, Sanfana was the company who was not doing this, and it was doing very accurate. Rest 5-6 companies I checked in Bengal, and they were doing the same process. When I luckily I got someone to understand all these things, so they took me to the association, and what they guided me, that they are doing this. The manufacturers are doing this with the impression that they are not supposed to reverse the credit if they do this. So this is the scenario, sir. Now, I'm coming to the further slides. I will just connect this. Okay. So only in the hands of distributor, that is the middle person who is purchasing from manufacturer and selling it further to the wholesaler. Only in the hands of distributor, the question that should distributor reverse the ITC on the goods, written goods, to the fact, as per me, the answer is no. ITC reversal is not required by the distributor, right? Retailers, to my understanding, retailers benefit from the reduced cost while manufacturers bears the highest cost. This is my summary only on the distributor's hand. Coming to the manufacturer's ITC reversal point. Now, this is bit interesting. The manufacturers are supposed to destroy the good expired medicine as per the instructions in the Drugs and Cosmetics Act 1940. This is a legal obligation on them, right? Now, CGST Act says that 17.5 in the 17.5 says that the goods which are destroyed, only ITC of those goods are to be reversed. So the point which I want to draw is that the manufacturer have manufactured 100 pieces, that the all the inputs were used and procured for the furtherance of business in the course of business. Further, that 100 pieces or 1000 pieces got sold to the chain. In that 100 pieces returned to the manufacturer. Now this 100 pieces is only required to be disposed of as per the mandate of Drug and Cosmetics Act, nothing else. So this is to be considered as a normal loss, or in a flavor of that it is a legal mandate and it's not a goods lost. So what I understood that manufacturers also need not reverse the credit, because it's not a no, it's not an abnormal loss. So whatever their inputs they have used for manufacturing this was in the course of business. So uh, actions taken in adherence to the law should not be excluded from business use. Destruction of expired drug is a necessary part of compliance with legal obligations. And what I mentioned, so there is one advanced ruling not related to medicine but related to paints, and it also mentioned the same thing, that ITC reversal does not apply to the destruction mandated by law. And similarly, I just doing a research, I got a similar judgment with the European Court of Justice. Where it was also told that if drugs are destroyed and the initial intent was for the business use, then ITC should be claimed. So this was a point which I was trying to highlight. That
Abhishek, one doubt.
Yes, sir, please.
When a manufacturer has issued a financial credit note,
Yes, sir.
so the original supply, he has availed the credit and made the sale.
Yes, sir.
So there is no credit restriction. When the goods returned, he
Yes,
has
sir.
not issued a GST credit note, he has issued a financial credit note,
Yes, sir.
and he is destroying the goods.
Yes,
So
sir.
where is the legal question of 17.5? Because where he hasn't even availed input tax credit on such goods.
Right, sir. So that's the point that, to my understanding, even if that is what sir, I wanted to conclude, that even when the retailer is having an accumulation of ITC, then also the manufacturer is not required to reverse the credit.
No, no. See, there are 2
Venu sir,
points.
what is your point? How do you say that ITC is not available on those goods?
See, the first transaction, ITC has been availed and goods have been sold off.
Correct.
Now the goods are returned, which is the next inflow coming in. There's no
Mm.
ITC availed when the goods came in. I have not issued a financial credit note.
So you have issued a
financial credit note.
So you have not reduced your output tax to that extent.
Yes.
Yeah.
Huh.
Nor I have availed any ITC on it. So question is, how 17.5 will arise is my point.
No, sir, in the initial manufacturing process, you have consumed inputs and input services and the respective ITC to manufacture the commodity for the first lot.
Which have been sold off.
Yes, sir, which has been sold off. And the GST has been paid.
Correct.
Now, subsequently, when the goods are returned, and so that's the point, we are on the same page. That's the point. When the goods are coming returned, we are only issuing a financial credit note.
Right.
Since we are issuing a financial credit note and we are not issuing a GST credit note, we are not reducing our liabilities. The counterpart is also not required to reverse any ITC. And when the goods are coming to our premises and we are destroying it with all the rules and regulations, then also the manufacturer is not supposed to reverse the credit.
अरे अभिषेक एक मिनट है.
Yes, sir.
एक तो शुरू में first we start with 194 rupees and then we went out to 500 rupees. ये स्क्रीन में हम क्या देख रहे हैं बताओ? ये 194 rupees क्या है बताओ?
Sir, 500 was only to
नहीं ये 194 rupees क्या है स्क्रीन में जो दिख रहा है?
हाँ, okay, sir. I just took the real figures.
नहीं एक मिनट रियल तो देखो. ये 194 से शुरू किया 500 तक चले गए, अभी 500 के बारे में बात करें या 194 बात करें, बताओ।
Sorry, sir, let's not do 194, sir.
ये 194 को डिलीट करते हैं,
Yes, sir. Yes, sir.
तो ये स्क्रीन को हटाते हैं पहले। नेक्स्ट है, you have enlightened about what all is going on in West Bengal. What is the law? What is your analysis? मार्केट में जो होता है, बाजार में तुम गए, 4 जने से पूछे, वो सब अलग, तुम्हारा रिसर्च, आंसर बताओ। What are they doing and why they are doing? अभी पेपर प्रेजेंटर ही हैरानी हो दिखाएगा तो क्या होगा? हैरान तो हमको होना है।
Okay.
You are surprised with what is going on in the industry. You were surprised yesterday. Today you tell me what is the answer.
Sir,
Hello?
yes, sir. Yes, sir.
चले गए क्या?
नहीं, sir.
बताओ, अभी वेस्ट बंगाल में क्या हो रहा है? See, 590 rupees का invoice I have given you. You forget multiple layers.
Okay,
Manufacturer to distributor.
sir. Right, sir.
I have given you invoice for 500 plus 90.
Right, sir.
ठीक है? You are, after 2 years, you are saying the goods have to be returned back to me.
Right, sir.
You have paid me how much money?
Sir,
590 rupees you have paid me.
Yes, sir.
Correct, no?
Yes, sir.
Now, I will give you financial credit note saying that 590 rupees I am giving you back.
Right, sir.
So, no profit, no loss for you.
Right, sir.
Now, what you are doing with 90 rupees ITC, you tell me.
Sir, I
Stock
did.
भी नहीं है तुम्हारे पास, ITC पड़ा है।
Right, sir.
क्या what is happening with the distributor? They have taken ITC, goods are returned back. See, goods are returned back with invoice, credit note. It does not matter the mode of returning back the goods. The fact is that the goods are no longer in stock. What is distributor doing? See, P&L account बनाओ, simple.
Right, sir. 90 rupees extra profit.
90 rupees profit, 90 rupees other income आ गया.
Right, sir. Other income. Right, sir.
So you have to explain your action, saying what is going on. Distributor has to reverse the 90 rupees. Yes or no? नहीं कर रहे वेस्ट बंगाल में, वो अलग बात। वेस्ट बंगाल में बहुत नहीं करते हैं।
Sir, can we conclude that this 90 rupees is again a supply and we pay GST on this extra?
अरे
90
नहीं, एक मिनट, पहले तो you explain whether the distributor has correctly complied with the law.
Okay. So
अगर कोई we can't discuss academically an example of somebody who is a violator of the law.
right, sir.
अभी बताओ what is happening. According to you, you have to now give a commitment. Distributor should reverse the ITC, not reverse the ITC.
Sir, distributor should not reverse the ITC.
Should not reverse the ITC. Please explain why.
Sir, because the
Material has gone out.
right, sir, the material has gone out, but sir, it was not on the basis of GST credit note. No one
अरे
has-
you forget the paperwork. बिना पेपर के भी माल निकल गया तो आउटपुट लायबिलिटी बनेगा नहीं बनेगा?
Sir,
Tax is payable by taxable person, not by the person issuing invoice.
right, sir.
If the material is going out of the factory with paper, without paper, ITC to be reversed, not reversed. Because the goods are no longer used in the course or furtherance of business.
Right, sir.
Outward movement हो गया.
Right, sir. हो गया.
It has to be other than supply or supply. This is a return supply.
This is a return supply.
Because I am getting money for it. No, I am getting 590 rupees for giving back expired goods.
Right, sir. Consideration is coming.
So
in.
ITC has to be reversed.
Okay.
नहीं, फर्स्ट प्रिंसिपल्स बेसिक एबीसीडी को देखते हैं, बाकी सब बाद में, कविता बाद में लिखेंगे. एबीसीडी बेसिक्स.
Sir, in
Now
that
we'll go to
case-
manufacturer.
Sir, please, sir, in distributor hands, sir, if we are concluding that ITC is reversal here only with the perspective that we have received.
नहीं, रुको, मैं तुमको मारवाड़ी अकाउंट्स बताता हूँ.
अच्छा.
अरे अल्टीमेटली हमको वही तो चाहिए. अभी आई एम अ डिस्ट्रीब्यूटर, यू आर द मैन्युफैक्चरर, यू आर सेइंग देखो भाई, डोंट रिवर्स द आईटीसी, तुम्हारा जितना नुकसान होता है मैं तुमको दूंगा. you are giving me financial credit note of 500
Okay.
rupees. I said नहीं 500 कैसे 590 मैंने तुमको दिया 590 वापस टेबल पे रखो. Correct no?
Right, sir.
So you are giving me 590.
Right,
ये
sir.
अलग बात है. 590 लेने के बाद मैं वो 90 रुपीज रिवर्स ना करूं, ये मेरी चोरी है.
Right,
The
sir.
manufacturer is giving 590 rupees in order to neutralize the original transaction.
Right, sir.
Distributor वो चोरी कर रहा है, वो अलग बात.
Okay.
Got it?
Sir,
पूरे सेक्टर में हो रहा है, मतलब पूरे सेक्टर में चोरी हो रहा है. क्योंकि see, one person is doing, all 100 fellows will do it. But that is not the interpretation of law.
Right, sir. Right.
ठीक है. Now we'll come to manufacturer.
Right, sir.
Venu's question also very relevant. Manufacturer says what? I have, my cost of production is, let us say 100 rupees. I have taken 5 rupees ITC on my basic raw material.
Right, sir.
I have sold it for 500 rupees plus 90.
Right, sir.
And I have not got back the 590 because the transaction got neutralized.
See, right. No.
Transaction got neutralized. Now, recovery of material from the market and destruction is a obligation of the manufacturer. ऐसा नहीं वो बोलेगा distributor को, if you want you sell it, if you don't want to sell it, you go throw it in the river. I will give you 590 rupees. That is not possible. Manufacturer has to necessarily bring back the goods,
And
maintain accounts of the goods brought back, identify batch by batch how much quantity was gone out and came back, and then certify the destruction process. Because
Yes.
they cannot put it in the river, they cannot, some medicines can be converted into veterinary use. Some
Yes.
medicines cannot be used for anything else, so they will be destroyed by burning, incinerator.
Right, sir.
Now in the records of, to answer your question, in the records of the company, there is a full inventory of material destroyed by fire. Now,
Correct.
sale and receiving back is as good as you have paid output tax, you lost the output tax because you did not issue a credit note for any reason, within time, outside time, all of those things.
Right.
Now, in the books of the manufacturer, there is a inventory of goods destroyed by fire. Now you
Right.
tell me whether you will reverse that 5 rupees proportionate to the destroyed quantity, or you will not reverse it. That's the question we have to examine, because ultimately 17.5 is not, it is in relation to.
Correct.
In relation to is we go to the mother transaction. One round it went and came back after 2 years.
Right.
Right, sir.
Distributor paid me 590, I gave back 590. Basically,
Right.
my original stock is back with me.
Right.
So 17.5 attracted, not attracted.
Sir, I still say no.
All right.
Because
So
when
it is a stand we have to take,
yeah,
that original transaction not attracted or not. Now we'll take another example.
yeah.
What is the HSN code of expired medicine? Abhishek.
So same.
Right?
It would be.
No. Expired medicine is poison. See, medicine cannot be given HSN code. HSN code to be given to medicine cannot be given to medicine which is expired.
Right.
Correct, no?
Right, sir. It will be no HSN.
What is HSN? No. I am now, you are getting 590 rupees. What is the HSN code you will specify? It is not a purchase return for the distributor.
Okay. Right, sir.
You have to give HSN code for your, you can't give original HSN code. I am highly doubtful how your financial credit note is working. And a financial credit note is without GST. It does not mean it is without HSN code.
With the HSN angle, yes, sir, this makes sense that The 590 was for a consideration for what?
See, as soon as November 30 crosses, no,
Mhm.
all sales become finally final because they can never be returned back. Agreed?
Right, sir.
If in the books of accounts, even after November, you will call it a purchase return, that is your books of accounts, and we all know that books of accounts we don't rely on. Now, after November 30, since it is no longer a sales return, now you please explain what is the validity and the sanctity of giving a financial credit note. If I were to say that financial credit note is a cross cancelling compensation, you understand?
Right, sir.
You are giving back an equal amount that you have collected by timing two transactions so that you neutralize the financial burden of the distributor. It is not one single transaction, it is two independent transactions carried out at identical value to neutralize the financial burden. Now you tell me.
Okay. So,
What is the legal validity and sanctity of this financial credit note? See, what was the financial credit note originally invented for? When it was one-to-one credit note, company said, I don't know how to give one-to-one. I have given 10,000 invoices to one company. I can't give 10,000 credit note. Forget GST. I will give credit note without GST. One
right,
name also was given for it.
right, sir.
Now we have to show that it is a credit note within. How do you explain we have to define a financial credit note? Can we say financial credit note is a credit note within the time limit under section 34 but not within the circumstances of 34?
So not a mandate, no, it is written may. So
No, financial credit note is not there in the act. Some
right,
definition somebody has to give. Now one circular also uses that expression financial credit note.
right, sir.
What is the definition of a financial credit note?
So financial credit note will be
Anybody can sort of offer their definition of financial credit note. But since once November 30 crosses, once we cross November 30, can we say all sales have become finally final?
yes, sir.
Anybody with a different view?
No, I agree with this.
Once November 30, correct, sir. Once November 30 crosses, all sales are finally final. Now, whatever happens is compensation. You are suffering a loss. It's a commercial decision. I will give you back the money. Don't cry. We want to do business with each other. Can we say it is now independent? It is not connected with sales. Because a financial credit note, can you say, is the reason is given in return for giving expired medicine? It is not possible because to collect back expired medicine is anyway the obligation of the manufacturer.
So now it becomes a service then.
Ruko, एक minute. To get back the expired medicine is anyway the obligation of the manufacturer, and the manufacturer has factored in a certain amount of overheads towards recovery of expired medicines from the entire market in his MRP of 500 rupees. The manufacturer will not suffer any financial loss. Whatever he has budgeted, he is going to incur. Now you look at the distributor's condition. As an obligation, he is sending back the expired medicine. 590 is a separate transaction. Now
Right,
you
sir.
have to explain what is this 590 for. See, to dispute any demand for GST, any argument can be taken. You understand?
Right, sir.
Now Sanjay Roy is saying that he did not murder. See, defense is different. Academically, what is the answer for, from GST perspective, why you are giving 590 rupees? See, proof of collecting money is a good indicator of Supply.
Supply.
If you supplied, you got money. Who supplied? Distributor supplied to manufacturer
Right.
something for which he is getting 590 rupees.
Right,
Now
sir.
somebody has to explain what that something is. I'm not going to explain. Somebody can explain. Anybody, Abhishek can lead and then others can join, please.
So to my, as per your guidance, sir, to my understanding, now this becomes a service. For doing an
तो
act.
590 के ऊपर 18% हो गया.
So 590 inclusive of GST 18%.
Hey.
But sir,
No. See, no. Then you see, then distributor will keep the 90 credit. No, he has to reverse the 90 credit. And 590 includes 90, so he's anyway suffering a loss of 90 rupees. Are you going to get 680?
no, sir.
So now you please discuss. बंगाल में ऐसे होता है.
I'm now very curious. But okay. Okay.
I went to market, I found out 6 जने से मिला, एसोसिएट में मिला. क्या मदर प्रॉमिस बोल रहे हो? जो तुम बोल रहे हो मान रहे भाई. एविडेंस का क्या जरूरत है? जो देख के आए वो बताओ क्या देख के आए, क्यों हो रहा है? तो वेस्ट बंगाल में अच्छा अपॉर्चुनिटी है मतलब. ಅಷ್ಟೇನಾ ಟಾಪಿಕ್? ಹಲೋ
Yes, sir. Yes, sir.
ಸರ್ ವೇಣು ಸರ್ ನೀವೇ ಹೇಳ್ಬಿಡಿ ಸರ್, ನೀವು ಟೈಪಿಂಗ್ ಮಾಡಿದ್ರೆ.
Hello, sir. I am saying that I don't accept it to be service. A situation where if manufacturer is not receiving the goods or distributor has not informed, it has validly expired. So it cannot be sold, and distributor, he didn't return back or he destroyed it at his site without informing to the manufacturer.
Sir, you're changing question. Those things are all not possible. Distributor will not have the infrastructure to destroy. Distributor is not permitted to destroy. Manufacturer cannot claim exemption from destruction responsibility. We'll keep the question as it is. Manufacturer has to bring back all the medicine.
Okay, manufacturer has
manufacturer
brought
has
back.
to show. Otherwise, manufacturer has to show that it has got sold.
Correct.
He
So
can't
as
falsify accounts.
agreed. So manufacturer has anyhow originally sold the showed that it is sold. Now when the goods are expired and he is giving 590 rupees, he is giving because the goods have come back. Otherwise, he wouldn't have never given 590.
No, sir, now we have to take the commercial reality and
Yes.
give and explain it in GST words. When the goods are coming back, it is
Correct.
coming back after November 30.
Right.
It should come against a tax invoice.
Correct.
It cannot have medicine HSN code. Chapter 30 cannot be used for this expired medicine. Let
So
us say
what I am
it is
saying is,
sir.
I agree that goods have come now. Now it can also come by way of credit note.
Sir, no, sir.
It's just
Credit
that
note after that. No,
it
credit
doesn't
note.
fit into 30th November timeline.
So now, sir,
Goods can still come back as a credit note as a
Sir,
sales return.
I'm only saying, once you cross November 30, all sales are final.
Sales are final.
So therefore, there can never be a situation of a credit note. It can be a tax invoice with GST. If it is a document without GST, if it is a document without GST, it is not a valid document. Because if
Sir, I think we are force fitting the thinking because why cannot it be a credit note? It has to be a credit note.
No, 1 minute. Once sales are final, the loss as credit note as defined in section 34 cannot be issued after November 30.
The GST credit note cannot be issued.
No, credit note means GST credit note only. If we are coming up with another document,
Correct.
if we are coming up with another document, we have to show how it satisfies section 31. Because financial credit note, when it is used in the present context, never
Right.
contemplates accompanied by goods. it is only a financial arrangement to write off the receivable.
Okay.
So now when the goods are coming back, it needs a document. What document is allowed in law?
So from 31, if we see, sir, it is only when there is a supply. When the goods are getting returned, why should we say there is a supply by the distributor to manufacturer? I would still say manufacturer is getting back his goods and it would be supported by the e-way bill and the credit note.
Now, then manufacturer has to explain why he is giving 590 rupees.
Okay, his explanation is not warranted under the law, but still, since the distributor has suffered the loss of 590 cash flow, I am giving him back 590.
Sir, no, sir. There can be transaction in money,
Correct.
transaction in non-taxable goods, transaction not amounting to supply. Otherwise, it will be supply.
Okay.
Venu sir, you said
There cannot be a none of the above category in GST.
Sir, valid credit note, what would you say? Would you say it as a supply?
Sir, no, valid?
If it is within the time, do we give a coloration of it as a supply? No.
Of course, it is supply. It is return supply. That e-way bill criteria, you only know better now.
Huh. So
Sir, it is a supply, sir. That is why the tax adjustment is allowed.
Sir, it is, why should we say supply? We should say supply return, no, sir.
Sir, now all these, we use GST words and explain the transaction.
Because in GST, that 31 is only for supply and not supply return.
Sir, if credit note is given,
right.
If credit, sir, that is why in a credit note, refund application is not required to adjust the tax.
Correct.
So
Within November 30, I can give credit note, or you can give me a tax invoice.
Correct.
In your books, you will account it as purchase returns, but in GST, you will show it as outward supply. It is supply only. It is negative supply if it is credit note. It is positive supply if it is return invoice. So there are two questions that are open. Everyone can please contribute. One is what happens, what is the document to accompany the goods? We can take a view that no document is required. Delivery challan saying it is other than supply, and e-way bill will come back and get destroyed. Then we have to explain what is the purpose of making the payment of 590 rupees. Is this an inward supply to the manufacturer? Taxable, non-taxable, exempt, excluded, something it has to be.
But if it is only a delivery challan, it will only have an effect on the inventory, no, sir? So then there will be two separate documents to give effect to that transaction. Inventory will be affected through delivery challan, and commercial part will be taken care by financial credit note. If it is
the reason why we have to, I'm trying to use only GST defined terms to explain this practical transaction is because we should not give incorrect reply to a notice if it were to come, and then get caught in the words. We have to be very precise as far as what we call each of these legs of the transaction. That's the only idea.
Yes, sir. Sir, like Venu sir mentioned, now from the manufacturer perspective, so he procures all the input materials and takes input and creates this medicine and sells it. So that condition in ITC, if it is sold as such, I mean, yeah, can we say that the condition is over? Because it should be a continuity, no, sir. Like you said, once it comes back, then I fail those conditions, even though it is Post
See, there are
supply
two-
transaction. Huh.
We'll take two examples. One, where goods are destroyed by
You are not audible.
fire in transit. To reverse any credit
Jatin sir, we
after
lost.
the point of sale.
Jatin sir, can you start from again? Your voice, we lost it in between.
Hello? Can you hear me now, sir?
Now it is audible, sir. Jatin
Okay,
sir,
so
are you there?
I'll repeat some parts which goods are lost in.
Sir, we are losing your voice again, sir.
So we again lost you.
I'm here only. I'm here. Maybe a little bit. Now I got 6G also. I got 4G. 5G has come. Can you hear me now?
Yes, sir.
I will repeat again. When goods are sold from the factory and are destroyed in transit by fire, no need to reverse any credit because the goods never got destroyed before the point of sale. Now, when we are bringing back the goods and we have records to say that the very same goods that we sent, we have recovered back. Whether we can say, I will not reverse the credit by the same analogy as destroyed in transit.
So I didn't catch the point of destruction in transit.
See,
first.
destruction in transit is once it is destroyed outside after the point of sale, I don't have to explain my transaction under 17.5. Okay, you got that part?
So irrespective
We are
of who
paying
bears
tax,
that
sir.
loss, sir?
Yenama?
Irrespective
Outward
of who
tax is
bears.
being, sorry.
Two people are talking.
Go ahead, Dhanush.
So here, what is happening? So when the goods are sold and lost in transit, the seller is paying tax fully.
Yes,
we are
yes. On
talking from the
output,
point of
yeah,
view
on output, the seller will pay full tax.
and we
Because
are
at the
talking from
time
the
of
point of view of receiver.
at the point of sale, they don't know that they are going to get lost in fire in the during transit, so they have paid the tax. The journey was for 3 days. Somewhere in the journey, it has got destroyed by fire. Now, no 17.5 will get attracted.
For the seller or for the receiver, sir?
No, seller
For the
only.
receiver, obviously.
No, seller. Because receiver never received, so he never took credit also.
Correct, right, fair.
Now we take the case where the seller has record of bringing the goods back and then himself destroying it. Whether we can use the same logic and say, therefore, I don't need to reverse that 5 rupees credit also. Maybe Venu also can weigh in on this comparative example.
I still feel that the goods which have been sold and got destroyed, either before receiving, after receiving, the position would be the same, and the reversal of ITC wouldn't arise.
No, you don't want to give a reason why. You want to just declare the answer.
No. My
Your reasoning is what?
That's my reason is when the sale happened. So my 17.5 I passed off.
No. There is no such thing. There is no. That's an assumption we are making.
No, sir. I'm saying when I've sold, I don't even have a stock which is destroyed to say that 17.5 attracts.
So that's
no,
what
sir,
my
but
question, Venu, sir.
But you
Like-
now, Umesh, Shama, now you have a record of being it, and there is a relevant fact and audit trail available. You cannot say once I issue a sale invoice, 17.5 ends. That's an assumption we are making without
Sir,
which is not
your voice
based
is
in law.
lost, but I get your question that now in the second situation, I have a record of goods being returning. My position is when I have a record of goods being returning, it is a new inward supply for which I have not availed any ITC. Hence, 17.5 H will not arise for the destruction at the second stage.
Very good, very good. No, this is a point we
I
have to
am
come
not
to.
saying that there is no inward. I am saying
No,
the
I got it.
inward do not
I got
carry
it.
any ITC.
No, I got it. Very good. I will give another
Had it
example.
been a financial credit note, if it has been a tax invoice, tax credit note, that means the inward goods have come in back. The position of the tax is restored.
Oh, I understood your
I
reasoning.
don't know whether my voice, I am losing the voice, or Jatin sir's voice is not audible. I am not getting.
Can you hear me now, sir?
Yes, sir. Yes.
Okay. Venu, I understood your reasoning for not reversing credit. Now, the second part of the question, if we sort of come to a conclusion, the first part also will get
I'm actually
answered.
not able to hear anyone.
Venu sir, we can hear.
We can hear, we can hear.
No, but Jatin sir is talking, but I am unable to hear.
We can hear, sir.
Yeah, yeah.
Okay, so that is my position, is goods damaged during the transit. We are not reversing the 17.5 because the sale is happened. But when the goods are returning back, that is a different transaction. And to that transaction, there is no credit. And I shouldn't reverse any ITC.
Understood. Now, the second question is, this 590 rupees that is paid by the manufacturer to the distributor, is it an expenditure? Is it an inward supply or a cancellation of the outward supply?
It is cancellation of the outward supply.
Even the transit where the goods are lost in transit, it's cancellation of outward supply, no? Like the receiver is not getting the goods.
No.
So why am I
No.
paying tax on it?
No, ma. In the destruction in transit, it is an outward supply that cannot now be cancelled. It will just extinguish in the fire. Nobody cancels anything. Outward supply made never reach the destination. GST will not refund this money. It's a loss the supplier has to take up.
Okay, got it.
Now, in the second example, second question, this 590 rupees the manufacturer is paying, is it an inward supply or a cancellation of the outward supply needs to be explained to the department? Don't know if my voice.
Sir, so in both the cases, from the accounting perspective, it is a cancellation of outward supply.
Is audible.
But the GST treatment is different.
Sir, not audible.
Not audible, sir.
Sir, don't want accounts, sir. Sir, don't want accounts. In GST, you tell what is it. For 590 rupees,
Okay, in GST for the second one, it is transaction without GST. Now it is a record of inward supply without GST. I would say it that way from the
Yes.
GST perspective.
Sir, you.
Oh, super.
I only request. I only request
Yes, sir.
that we explain it from GST point of view. Either it is a transaction in money, non-taxable, exempt supply, or something. We can't say it's a mysterious new variety.
Sir, can we say it is the performance of the contract? Because earlier when I sold the goods, I have agreed that even after the goods expires, even though it is not marketable, I will take it at an agreed price. That is the price at which I sold. It was an agreement which was entered before the supply, and because of the GST, I may not be able to issue a credit note as per the GST.
You could say that. No, you could say that if it's that it is an agreement to tolerate an act or a situation.
Can't hear Jatin sir's voice. Is it for everybody or?
Yes,
No,
yes.
I will keep quiet for some time. You guys discuss the second question, and then maybe because my connectivity, I'm having some issue.
Just keep hearing, sir. I think I want everyone to give your views. What Jatin sir said is right, but there is a difference in accounting treatment. There is a difference in GST treatment, and since the goods are now coming back, now it's a cancellation of the original supply, or is it an inward supply? Now, if we are talking it from the accounting perspective, yes, it is a cancellation of original supply. But however, it is still a sales return from the accounts. But for the purpose of GST, it is an inward supply under Section 35. I will maintain the inward record, but there is no GST in the inward record. Hence, I am not going to reverse any ITC. That is my view. I want
Now,
others to.
Jatin sir raised a point that what will be the HSN code when it is an expired goods. So once there is a transformation in the classification itself, like you mentioned, it is a new inward supply with a new classification.
Correct.
So ideally, the distributor should raise a tax invoice with that new classification with
See, I
whatever
would say
applicable
that he is
GST.
not selling me back anything. I am taking back goods.
No, but then what is the mode, GST mode in which we take back the goods? It
I will
cannot be a
raise
return
it.
supply, no?
No, I
That
will
is time
never.
over.
No. I will only raise the sales return. I will take the goods. It's just that I am not permitted to take the reduction of the original liability which I have raised.
So which of
It
those
doesn't say,
documents?
it can never say that one cannot make a sales return after 30th November. It's just that I cannot issue a valid credit note after 30th November.
Then the point we agreed that after 30th November sales will become final is not agreed upon. It can go endlessly.
The sales for that year is final. That's all. From the GST perspective. From the accounting
It's
perspective,
written.
sales can go endlessly.
So sir has put a question in chat.
Yes, madam.
Venu, can we tell that as it
here
is
there is.
expired goods, it is not at all a goods? Can we say that also because
Yeah.
it
I
has
am
been
not of the
That
expired
is
view
and
even I have
cannot be goods.
the
It
same
is
view
still a goods.
because no, it is not the same goods and it is not usable. See, the
I
condition
agree it is
is,
not same goods. It is
and
not
it
usable.
becomes
It is a scrap.
technically a waste. Technically a waste, but it is in privity to the main contract. Main contract, there is a condition that the expiry goods have to be taken back by the manufacturer. That is the condition technically. So once we take that particular thing, and if I'm correct, in this regard, there is a circular or a notification which has clearly stated that you have to issue there are two ways of doing it. One is with ITC, one is without ITC. So I think
192.
I think there are two circulars, if
Yeah.
I'm correct, in
Yeah.
this regard, where they have already put about the explanation in this regard is my view. I think we have to first look at the circular in this regard and take a decision. I'm of the
One
opinion.
is rescinded, no? One circular is rescinded.
No. One is resigned, but one is still in existence, if I'm correct.
Annapurna, you're saying 105. Sir is referring to a different.
No. There is a different circular itself on this particular thing. Only for pharma industry, they have brought out this specifically, if I'm correct. I don't remember the number, but I think it must be 54 or something.
So 74, no, I mentioned 72 by 46.
Yeah, 72 per 46, correct. I think that one only, if I'm correct. So I think with respect to pharma industry, there are two circulars.
I have a small question. Just because the goods are expired, how will it lose its character? Yes, it's a poison just because it is expired, but still, I am not able to understand how the character of the goods will change and HSN will change.
Madam, it should be
Madam,
marketable.
HSN can
madam.
change because HSN for scrap is different. HSN for original electronic is different. HSN can change.
Milk and pista milk HSN is different.
Madam, unexpired goods is a marketable. It can be bought and sold. Once it's expired, as per the statutory provision, it cannot be sold. So it loses the marketable.
Mylar, as
Okay, if that being
Jatin
the
sir
case, can't
mentioned,
it be a exempted goods when he is returning? Can it not be a new supply?
It's not a goods only now, madam. How can it be exempted? When sir, you were saying something.
Mylar, so Jatin sir mentioned most unexpired goods are not marketable. Some unexpired goods will have some market in the veterinary market or somewhere. So, will marketability determine the test of the characteristic of a good, or will tangibility test the characteristic of a good or service?
Sir, I think what Jatin sir said, see, expired medicine will not have direct marketability. The export medicine has to be returned back to the manufacturer,
Right.
and manufacturer can decide which one to destroy, which one to reuse for veterinary and other things.
Right.
First of all, once it's expired, there is no marketability.
So the test of being a good or service is the test of marketability, or is the test of tangibility and movability?
No, it should be marketable, no, sir. Unless marketable, there cannot be
Why will
contract.
you buy a thing which just because it is tangible? Why are you going to buy it back?
No, no, no.
Here it
There is a
is.
legal,
I
there
am in the
legal
definition of
restrictions. Without
252.
marketability, you can't sell it.
No. So, Mylar, so anything that is unable, I am unable to. So, okay. Let's say an iPhone version 3, no one is buying. Are you going to say that it is not good?
No. See,
No. Here you cannot
marketability
compare
is
that with
different.
iPhone.
Non-existing buyer is different, sir.
No. If a good is not marketable, are you saying it is no longer a good? So from 252, it becoming 102 just because it is not in 252. But I am saying that it has to be excluded from 252 only on the condition that it is not tangible and movable. It is every kind of movable property. It is a movable property. The HSN, okay, I don't know whether I casually put it as poison HSN, but I'm just saying that I don't know the HSN. Just because I don't know the right HSN, does it loses the characteristic of being a good?
Madam, but how is that relevant in this discussion?
No.
Because,
so it is whether it is goods or service that came up. I am still saying.
Okay. So because now we all have agreed that okay, this is the cancellation of original supply.
Agreed.
So the original supply is cancelled. Now goods are moving back to the manufacturer. So those
by
goods
way of a sales return.
Okay, we'll tag it whether it is a sales return or actually another supply.
Right.
But at the same time, these goods are carrying nil value. They don't have any value.
Correct.
So the value could be nil.
Correct.
Possibly nil.
Correct.
Generally.
Yeah,
so that itself means that okay, there is the goods are moving back at nil value.
Correct.
Now, what amount this distributor or retailer is getting back is not on account of the returning those goods to the manufacturer, but it is something else. So therefore, when we are talking about HSN of original goods cannot be applied because there exists no goods here for the purpose of classification alone.
Right.
For the purpose of classification alone. But what retailer or distributor is getting is something getting is the money what he is getting other than for returning goods. So when it is when this particular transaction has no goods, then I think it will qualify as service possibly because of the various agreement clause as we were discussing.
Right.
And accordingly, I think we should discharge GST. This is my view.
No. So discharge GST in the hands of the distributor or manufacturer?
Distributor.
Okay, so the question which we are on is, should manufacturer reverse the 5 rupee ITC which he is originally availed while manufacturing this? He manufactured for 100 rupees, sold for 500 rupees plus GST 590. Now 590 is coming back. Should I reverse the 5 rupees which the manufacturer has originally availed the credit?
Yes, that is what the notification, I think, if I am correct, tells also, it tells that the manufacturer is the person who has to reverse, and in between, there is going to be no impact. I think I remember reading this circular long back, but I am not remembering the contents exactly. But the intention, it tells that there are two methodologies. So one is a methodology where the value, that is what the trade itself is being following. There are two methodologies which are followed. One is with payment of taxes, one is without payment of taxes. In case where there is a without payment of taxes, the manufacturer has to reverse the ITC to that particular extent, is what I think that notification circular mentions about it. And another point is what happens. See, there is another risk here. See, what happens, I'm selling the goods at 90 rupees, say 60 rupees, the manufacturer is selling the goods at 60 rupees. The distributor sells the goods at 70 rupees. So what happens to the profit element or profit margin? Because there are two methodologies which is followed by different manufacturers. So each manufacturer has given up a different methodology for this particular transaction, basically. Okay, so here when it is given as an exchange is money to money exchange is being given, is one methodology which is being followed by the industry. The other one is exchange of the product itself. So for example, I have taken Dolo 650. Dolo 650 only, they will be giving 10 sheets. For 10 sheets, exchange will be given. So here there are 2 or 3 different methodologies which are followed by the industry. So the issue is, when there is a profit element, what is the profit element going to be done? So for the previous transactions which have already taken place. So one thing where we are considering that it is not a taxable transaction at all, and I think the circular also is specifically giving it, and it has already mentioned this particular thing in the circular itself. Okay.
So Shekhar, just want to conclude first point, because you've said 2 points.
Yeah.
Now you are saying that the circular said reversal of ITC. Now,
yes,
if everyone agrees that there is a reversal of ITC, imagine for a moment that the goods are returned back well within the time. Okay.
If it is done well within the time, there is no issue, right?
So
is it
how
of
can
expired goods? No, is it of expired goods or the regular goods? That is what I'm asking.
expired goods only? Expired goods only.
No, the
Rare
scenario
scenario,
is
Vishnu.
the scenario, whether it's an expired goods or an unexpired goods, I will still be claiming it as an exemption only. Means it depends. As I told you, there are two different thoughts in the manufacture, in the medicine pharma industry itself.
No. First, let us only look at the law, Shekhar. Then we will go. Let's not go for exchange. We'll complete one scenario and let us get the arguments clear. Right.
Okay.
590 is coming back with the original transaction. So when the 590 is coming back, my sale is restored. So I have returned back the whatever the taxes I have paid. I have adjusted it by way of credit note.
Okay.
That means my original sale is nullified. Goods are with me with tax being availed. So
Okay.
when you are destroying
Tax
those
being
goods,
availed, also outward tax being paid, both.
outward tax being
Then
paid and
reduced
returned
back.
back, it is
Reduced back.
nullified. The original sale transaction has been nullified.
So in this
Does that mean
situation,
outward
I
when
have
a
a different view. The original sale transaction will not be nullified in this case when it is expired goods.
Okay.
Because you at the time of supply, the goods were not expired, but when it is coming, they are expired. So I don't think there is a cancellation of original supply
Okay.
here.
Can I issue a credit note when the goods are coming back within the same time?
If it
circular
is coming,
permit says so,
if
72.
it is coming back within the time period, time permit specified under the law, then you
Ah.
can issue credit note.
I can issue credit. If I am issuing credit note, that means I am issuing credit note and I will have to do an e-way bill,
Yes.
which means I am doing it for those goods which I have originally sent.
Okay.
And that e-way bill and that credit note will carry the same document of 500 plus 90 rupees.
Okay.
If it is carrying the same document before 30th November, why will the
Okay.
coloration of the transaction change after 30th November?
Okay. So first here we have to deliberate on whether the credit note, if it is returning within the time limit specified under the law, are returning, the value is still remains the same, or will it change because the goods are
It will
expired?
still remain the same.
Okay.
I will still issue the 500 plus 90 to the supply to the distributor, and he will reverse the ITC.
Okay.
So Venu sir, in this situation, the only thing finally remains is ITC availed by the manufacturer. All other things are nullified, correct? No.
Correct.
Now the question is, what should manufacturer do with this ITC?
Meaning the tax pay also is paid, right?
One is
Is it
ITC of
reversed?
manufacturer reversal
No,
and
see,
statement of whether it is goods or service.
See, Dhanashree, what happens? Manufacturer supplied to distributor returned back. So output paid, output reduced for manufacturer per se. From
That is
distributor,
if it is within the time limit.
correct. That is what we are discussing now. So for distributor, he availed, he reversed. So everything got nullified. Only point is manufacturer availed ITC with respect to this time expired goods. Now, what do we do with that? Is the question we should address in this first situation where GST credit note is issued.
Got it.
5 rupees has to be reversed for 100 rupees ITC.
90 alva? The example you took, 590.
Credit note is 90. Adadu outward liability reduction. For ITC reversal, he used 100 rupees inputs, 5 rupees ITC was there in that, no?
Okay,
Correct,
fine.
Venu.
Yeah.
In that circular, clearly it is being mentioned, Venu. On this point only, if you go to the
Shekhar, for a moment, if we ignore circular, assuming circular is not there in the law, what will be your and my position?
See, when the manufacturer has alternate use of that returned goods, saying for veterinary purpose or whatever, then where is the question of loss of ITC for
No,
him?
if he destroys, the point is if he destroys, okay, there are 2 points we are discussing, madam, for everyone. Point number 1, when the goods are coming back after 30th November and or after expiry, will it be a goods or service? That's the point 1 we are debating. Point 2, who should reverse the ITC? Should the distributor reverse the ITC or should the manufacturer reverse the ITC? Whether when the goods are coming back within 30th November or coming back after 30th November. These are the first 2 points only we are discussing. Then we will look at the alternative arrangements.
That part Annapurna, she told, no, like distributor has to necessarily reverse the ITC because he's getting that 590 rupees.
But after 30th November, will he still reverse ITC? Financial credit note which is issued?
Has to keep a track of expired goods and keep reversing whether he receives it or not, because it will become unsaleable.
He is returning the goods, expired goods. Should he reverse ITC? Should the distributor reverse ITC?
Distributor necessarily has to reverse the ITC irrespective of whether he gets that financial credit note or not, because the goods will become unsaleable.
How do you say it is unsaleable? He has returned the goods. That's only the
Correct.
fact.
So the condition of receiving the goods, does it end once received, or should it be continued to be in possession? I mean, that is the point, initially I also raised, like the fulfillment of conditions, does it end post sale? No, because
Agreed. See, according to me, I am of the view he has to reverse the ITC, but more precisely, I am of the view that it should be a Schedule 1 transaction. He has to discharge the by way as a Schedule 1, because the from the distributor perspective, he is not the one who is destroying this. So hence, according to me, he will not reverse, because this is neither goods lost, stolen, destroyed, but he is removing the goods where ITC has been availed. So it is a
deemed
Schedule 1
supply.
transaction.
Oh.
So both are kind of tax neutral, but I am of the view it is not reversal of ITC, but it is a scheduled transaction. Any other?
See, as per the circular, it is very clearly telling that when there is a reversal or when a transaction is being shown, whatever the goods have been reversed, the distributor itself will be raising an invoice on the total transaction, and that total transaction, what is the value of that transaction has to be reversed, is what it's trying to give an indication on the total transaction value.
Shekhar, when you are saying that raising of invoice, reversal of credit, both aren't they contradictory statements?
No. That is only for the manufacturer, because it's the manufacturer's duty to.
No. We are talking in the right now. The discussion is what should be the distributor doing when the goods are returned after 30th November.
I am also speaking about that only because in the circular they have defined or given a specific clarification with regard to the expired goods which are treated as a fresh supply.
So
they are deeming it. If you are looking at it, they are deeming.
So when you are treating it as a fresh supply, Shekhar, it is not reversal of ITC. It is treated. It is an outward liability.
But outward liability in read with 17.5. So 17.5 is specifically very clearly mentioned that that the manufacturer will not be eligible for taking the credit accordingly, because it's a time expired good. So
Shekhar, we are only looking at position of distributor. Distributor, is it an outward liability or reversal of ITC after 30th November?
See, generally, as I told you, there are two methodologies which is being followed. Means by the industry based on the associations, whatever they have created. And overall, I think one is it is shown as an exchange of goods, exchange of expired goods with the good goods. It is going only for the.
We have taken a situation where credit note, financial credit note has been given.
Yes, basically.
Because if we club multiple things, then there wouldn't be end. Let us complete one, and I think we will agree to what is the position of that.
Okay.
I think Venu sir, we still didn't address that question what you raised. Just because a credit note is issued before 30th November or after 30th November, will it change the classification? That is your question now.
Yeah, so that is where I'm saying. So we are jumping from one to other.
Correct. So if it is a
Kuber.
Yeah.
Annapurna madam, continue please.
So if it is a GST credit note issued within 30th November, obviously the HSN which is mentioned will be the same as the original supply. Is that correct at the first instance? Is what is being thought and done, is it correct at the first instance? Because Jatin sir was specifying that once it is time expired goods, it loses the character of its characteristics of being a medicine. Hence, it cannot continue in the same classification. If we address that, probably we'll get an answer to whether, irrespective of whether it is before November or after November, since it is time expired goods, obviously classification should change.
Yes, exactly. So before 30th November also, if in according to me, we cannot issue credit note, because if you go back to section 34, it specifies that goods supplied are returned. So at the time of supplying, they were actually unexpired goods. Now he is sending back the expired goods. So 34(1) credit note issuing before 30th November and nullifying the original supply, I think would be incorrect according to me. Even before 30th November also, there cannot be a credit note to nullify the original supply, and therefore,
So Kuber,
whether it is 30th November,
would you hold this statement true for every other product? Let's say an electronic goods or anything which has a warranty and the warranty has expired, or anything which has expired and it is coming back.
see, warranty, we cannot equate this particular.
Okay, let us say some bread, food, whatever. Every item that is expired which is coming back, forget medicine, every expired goods when it is returned, we should not use the same HSN. Will we hold this statement for every transaction?
Yeah, mostly perished goods.
We
I
have
think
to
we
hold.
can
We have
look
to.
at the circumstances and then see what what tax position can be taken. But the issue what we are discussing as of now when it comes to medicines, I think this is my view.
No, because it is expired, we are now saying it is not medicine.
Yes.
And
Yes.
HSN changes.
Yeah, so
Yes.
sir has put the message in the chat. Because the HSN changes, definitely credit note cannot be issued. It has to be a tax invoice
Yes.
from the distributor to the manufacturer, irrespective of it, if it is it before 30th November or after 30th November. It should be ideally a tax invoice to be issued by the distributor to the manufacturer with the changed HSN.
Okay, when you say change the HSN,
Can you say
are
just
you
because
then
credit
you are
note
saying
cannot
that it is still a goods, or you are saying that it is a service? So goods will, these goods will move without any document and e-waybill?
Without any value also.
So the goods will be, so you don't even need to raise an e-waybill irrespective of the value of the MRP of the goods.
Can
E-waybill.
we take it as a, can we take it as a waste or scrap entry? Because Jatin sir was saying that if we
Madam,
don't.
the moment you are saying waste or scrap, you are still saying it is goods.
Yeah, that's what, see, one thing is, I think sir is trying to say that expiration, in one of the chat, he has said that if it will be very risky if you don't call it as a goods. So in case if I'm not coming into that original goods, but can I still take it as a waste or scrap? Because there should be some existence when I'm raising a fresh supply. They should have something as called as goods. No? It cannot be something without giving a character of goods to that product and then saying that it doesn't have any HSN or it doesn't have any existence as such. So I'm talking is, sir is trying to say it will be very risky and it can be taken to as a residual entry. So can we still take some value of that as a scrap or waste and then return back those as a fresh supply, or how it should be? Because it has to have some existence. That is what my view.
See, as far as value is concerned, we are getting something in return. Why should we even go for any imputed value? That value itself would be sufficient. And as far as goods is concerned, yes.
Yeah,
Okay,
that
but
is what
something
Jatin
lesser.
sir is trying. Yeah, that's what we are just trying to look into that aspect also.
So, so Venu sir, like, let's say there is this, let's agree for the moment that there will be a change which will be required in the classification per se. So, so at the books level, we are going to pass an SJV and transform its classification and then move these goods with the DC supported with the tax invoice, huh? Or, okay, if it is tax
Exactly.
invoice.
So I am also of the view, from the distributor, it should be an invoice. Okay, it is not me who is destroying it. So it will, instead of credit note, it has to be an invoice, and invoice for goods. The same amount has to be returned back.
Okay, we now come to
I
input
am
tax
not destroying, so it is not 17.5H.
Value of 590, yeah?
590. Because I have availed ITC for that, and I am giving back that goods. And this position is even after 30th November, before 30th November. Whether I have financial credit note also, I still have to discharge my outward supply. Because some goods where I have availed ITC is disposed of.
So technically in the books, there will be a transformation of the classification and I'll generate a tax invoice and e-way bill will be supported with that underlying document and it will move. So
Yes, that is my view.
will I be eligible to claim the original ITC?
Yes, you are not required to reverse the original ITC what you have claimed in my view.
No. Who? Manufacturer, distributor?
Distributor, we still in the
Distributor. Okay, no, distributor you have already availed, utilized, and it's over. No.
yeah, correct. But now that now the good itself got transformed and I am further, I mean, I'm supplying
Making a
it.
supply of it. So
Making
where
the
is the
supply.
question
So
of reversal of ITC? You have a reversal comes only in 17.5, but you have taken to schedule 1. So you have said ITC is availed. So there is no question of reversal of ITC.
So when I availed, it was a different classification.
But
I
it
am
is in the course
supplying
of
it now.
furtherance of
Okay.
business, madam.
Okay, fine. Yeah, okay.
Mm.
Yeah, I think, yeah. So as far as ITC of the distributor is concerned, it is not required to reverse ITC, but it should be an output supply from the distributor per se. Okay,
Correct.
I think, so shall we conclude on this part and move to the manufacturer part?
Yeah, so anyone has a
Having
different
known
view.
that it is expired goods and it does not have value, but still will you go ahead and raise an invoice for 590?
I will say I will raise for 590 because that is the
basis of arriving at that 590.
In my view, I have bought something and I am returning back. I am returning back for that, and for that which I have returned only, he is paying me. He is not paying me for anything else. If I don't return, he will not pay. He will pay when I return. So that means I am getting money only for the goods that is going back to him.
It is not at all connected to the goods. It's not at all connected to the value, but still you are going to get back what you have paid for. So it is completely.
But I will be getting only if I send these goods back to him, these expired goods back to him. So the value of that expired goods, in my view, I am a distributor, in my view, is 590.
Okay. Jatin sir, you mentioned that it should be less than 590. So then, I mean, transaction value is 590. No, sir, here. Why should we take a lesser value than 590? Jatin sir is there?
He's there, but his audio has an issue.
Oh, okay.
So, Kuber.
Yeah, Venu sir.
Hello. Venu, if you are telling that, for example, Dolo 650 is a good which has a tax rate of say 5%. So if you are telling that this is going to be something else, then it could go to the residuary clause. So the residuary clause will be at the rate of 18%.
Yes.
So will this be right to tell that now it is going to be instead of 5%, I'm going to charge 18%, or some other classification where it is going to be there? So based on which there is going to be further ramifications if you are trying to take the stand, 100% that it will create more confusion because the industry is following something and we are trying to come out with a new claim of this particular
No,
thing.
Shekhar, that is what I am saying. I am still, as a distributor, when I am returning back, I will be charging 500 plus 90. From the
But how
beginning, I
will
am on
you
the same
charge
view.
500 plus 90 if the HSN is different? If the
I am saying,
classification itself
for
is
me,
different.
it is the same classification is what I am saying, Shekhar. From the beginning, I am saying the classification, it is expired. I am not denying.
So in this, okay, so see, whatever at present, what the industry is following is they are sending back the goods, but they are giving a note for expiry. As the goods have expired, it is mentioned in the narration that it's an expired goods, basically, as such.
Correct, Shekhar, but what is it being sent?
It is being sent as the same goods. It is being sent as the
Correct.
same goods.
See, ice has become water by
Yeah.
lapse of time.
Yeah.
So distributor will issue invoice for ice but send back water.
And the circular also has clearly mentioned on this. See, I agree that there's a change in the classification or because of the expiry that cannot be fit under the technical classification. So this is going to have an issue in this regard. But but if we consider the GST circular which is there, it tells that when we are reading the circular, it gives an indication that it is under the same classification as such. It doesn't try to indicate that there is a change in the classification and other things. So, circulars will always be binding on the department. So, I think we can go about based on that to take that it is a transfer of the same property in goods as such.
Yeah, practical call is different, sir. But from academic perspective, we're trying to understand whether
Correct.
there is change in the classification requirement or not. That is the
Yeah.
issue. So, sir says, okay.
Yeah, exactly. We should discuss
Yeah.
without circular, Shekhar.
Circular.
We need to, assuming for a moment circular is not issued. So what are we going to say?
So, like sir has mentioned, ice has become water. So, HSN will be of ice, but returning water. Is that fine?
In fact, that question is to me.
Hmm.
I am still thinking.
Is it
So
a question or is it a statement?
it's a
which sir
question.
has
No,
made?
it's not a statement. It's a question.
Oh, okay.
Sir is not saying that invoice has ice and send water. That is not his statement. He's asking a question to us.
Oh, okay, okay.
Yeah. And the question is to me because what I am still saying that the HSN is of medicine, but what I am sending is poison. And I am agreeing to it. Okay. By the way, I'm still thinking on it.
But the valuation, I agree that the value of expired goods cannot be equal to the value of the goods which are being sent. But as per the principal contract, between the manufacturer is sending the goods, he has given a commitment that he is going to exchange this particular medicine or he will give you that much of a value. So the value is being determined for this expired goods at the initial inception of the contract or based on the contract of the manufacturer is my view there.
Yes, sir. Yeah, I get that point.
So, how do we conclude on this, Venu sir, now?
No, Kuber, give your views. I am still doing some thinking. Because
See,
there
my
is a
view
merit
will.
in what Jatin sir said, but I am still unable to negate some of my thoughts.
Okay, what happens whether distributor can keep the expired goods without sending back? Is that possible?
Many times it happens. Actually, in reality, sometimes the manufacturer itself is not there in the business. He closed down his shop. What will the distributor do?
No, correct. I mean, those cases still exist. But the question here is,
legally is not supposed to.
is it, so is it legally possible?
Legally, there are agencies who are nominated for destruction. It is not necessary that I have to send it to manufacturer for destruction. There are authorized agencies on behalf of the manufacturer. I'll give it to them. They will destroy.
Under Drugs Control Act, the license is given to the manufacturer with all these conditions, and he also has to monitor the goods lying at the distributor at retailer stores. And if any goods supplied by him expires, then he has to follow a certain set of process or procedure to take it back and destroy. And all these things are very regulated. So the answer is the distributor cannot keep those goods. So he has to send it back to the manufacturer. He has to send it back to the manufacturer. So there is no choice for him. Now, this is regulated by law.
Correct.
When there is this regulation that applies, and because of which there is an agreement between the manufacturer and the distributor, what he is sending back the goods will carry a nil value, and it cannot be a supply returns because of change in goods. I mean, it was unexpired then, now it is expired. Therefore, this is not a transaction involving supply of goods, is my view still. Therefore, I was mentioning it can be a supply of service. And when it comes to input tax credit in the hands of the distributor, my view is that he is not liable to reverse the input tax credit. So
why do you say it is not goods? Can you please repeat that point?
It is not goods. I mean, this transaction of returning the expired goods is what you mean to say, Napurna madam?
Correct.
See, the reason is that okay, he has to send back the goods, expired goods under the agreement and under the regulations that are applicable to the distributor as well. So it is the manufacturer obligation to get the goods back, and also the distributor also agrees to comply with this obligation when he comes across this expired goods which are remaining unsold at his end. Therefore, this goods, although we are returning these goods back to the manufacturer, I am saying this cannot be a transaction involving supply of goods.
Then what it is, according to you?
According to me, when we say that okay, this is not a transaction involving goods, it can be service also. It can be construed as service.
Is it an independent service or it is a performance of a contract? See, whenever I enter into an agreement with the distributor, first thing is I will say I will sell these goods to you. If it is expired, you have to return me, and I am obligated to take this at a rate at which I sold to you. So this is one of the terms they use, because expired goods normally don't have any value. But because of this agreement, I'll agree to take back the expired goods at an agreed price. Okay.
Correct.
See, taking these goods at an agreed price is nothing but a performance of the contract which was originally agreed. Can this be
Correct.
a different service altogether? See.
So what is your view, Mailar?
So my view, it is just a performance of a contract, and it is just a transaction in money.
Okay, so it is not liable to GST.
Not
when you
liable to
say it as a transaction in money.
Yes.
Okay, but in that case,
Minor, I agree, transaction in money. Will the manufacturer pay the money to the distributor if he is not informing about the expiry and not returning the goods?
No, see, well, the insurance company will pay you the amount unless you claim it.
Correct. So here also,
if you claim, then only you'll get the money. So
no,
even if
the proof
expired,
of claim is movement of the goods.
Sorry?
Proof of claim is movement of the goods.
Correct. Oh, yeah, expired goods has to be moved back to manufacturer. Manufacturer will pay you his claim as per the agreed contract.
Correct. So, which that means it is not a transaction in money. If it is a transaction in money, irrespective of that act, the money should flow. Here, it is not a transaction. The money flows only upon happening of an act. It is under Sale of Goods Act, not under. It is not a transaction in money.
No. As per the agreement, I will pay you. I will take back the goods at the agreed price.
Which will be routed under Sale of Goods Act. It is not a transaction in money. How can you say
Sale of Goods Act applies to market sale as such? No. If it is expired, then it is not a goods. Then again, sale of goods will apply for that. To apply sale of goods, it should be marketable, no, sir. See, unless I had an original sale, I would not have taken this.
Okay, by the way, the author is fully silent, Abhishek.
Sir, not silent, sir, driving.
Silently driving.
There's another question which is remaining unanswered. What will manufacturer do? He is liable to reverse the input tax rate once he destroys his expired goods.
Yeah, I am reconsidering, and I am the reversal of ITC by the manufacturer should happen. Even the goods come before 30th November or after 30th November is my view. Been thinking since it became the good and it has come. So the 5 rupees the manufacturer has availed has to be reversed even after 30th November or before 30th November also.
Okay. So, but according to me, this input tax rate is not reversible.
Why?
He has to destroy it. He has no other choice, and he has used all these inputs and input tax rate.
17.5H doesn't say the legal moral obligation, because that's where when Abhishek had put up that point, the reversal, the reason for reversal. So if it is obligated in law to reverse, to destroy, we will not reverse the ITC. If it is, there is no obligation, we will reverse the ITC, is not coming out of the GST Act. So reversal has to happen irrespective whether it is obligated or not, is my view.
Okay.
And even if the goods come after 30th November also, manufacturer has to reverse the ITC on it.
Okay.
I concur with Venu sir's view.
I agree with Kuber and Mylar.
The reason is credit note return transaction is just a opposite image of your outward supply, and whether the identity character of the goods undergo change when you return back, it shouldn't really matter, because as per the contract, goods, if they are expired, they don't have any value. They have to be either returned back to the original manufacturer, or they can be destroyed as per the norms or procedures which may have been laid out in the Drug Regulation Act. It's just a mirror image of your outward supply, and all this classification, calling it as an outward supply, I slightly do not agree. According to me, it is just a reverse image of the outward supply.
So Mylar, so what do you feel? Should there be a reversal or no reversal?
So for manufacturer end,
Yeah.
yes, reversal is required, sir.
Kuber?
See, considering the 17.5, reversal is applicable, but when we were discussing that this could be a supply of service by distributor to
Correct.
the manufacturer. If we stick to that idea, there may not arise reversal of input tax credit, is my view. Of course, we can.
Because what I sent is ice, what I got is water.
Yes.
So where is the question of reversal on ice?
Yeah.
If you take that
So
view.
it depends on the final, yeah.
Once the reimbursement to the distributor has happened, still there is going to be a reversal, because the manufacturer is going to destroy this particular goods as per the Drugs Control Act. He has to do that destruction, and there is going to be a destruction of goods. So 17.5 will be applicable for this particular thing, and reversal has to be done. That is my view.
A reversal even after the credit note issued after 30th November?
Yes. He has to do it.
So the only defense which I'm still thinking is after 30th November when the goods are coming, and I am saying that this is another fresh transaction.
Yeah, even though it's a fresh transaction, Venu, after the goods come to your unit, you are sending it for destruction, Venu.
No, what is the ITC on it when it is a fresh transaction? Let's say when the supplier, when the distributor has given me a tax invoice for the goods. Then
yeah, after that goods are coming, what is that you are going to do with the goods?
I am going to destroy, Shekhar. So when
Correct. So once there is a destruction of goods, then in that particular scenario, because there's a specific contention, so once the distributor has raised the invoice for, say, 100 rupees is the value, 18 rupees the tax invoice, 18. So 118 is the value I have. He has charged me.
No,
so
no,
once
Shekhar, let's not change the
once the
example.
goods have been received by your end, the distributor has raised the invoice for you as per your thing.
Right.
So once he has raised the invoice and then you are sending it for destruction, so that becomes the value for the purpose of reversal, technically.
So, Shekhar, the scenario is I have raised with 500 plus 90. Now the distributor is sending it back with a tax invoice of 500 plus 90. How much ITC I should reverse?
Because for you, now you are telling that, see, it again depends on what scenario you have adopted. Now we are adopting that this becomes the value of the sale, basically. So once this becomes the supply value is 500 plus 90, then you are supposed to reverse the tax on 500 plus 90 only technically.
Right. Now, if it is a situation of a financial credit note, I have issued a financial credit note, I have received back the goods. Supplier has not raised an invoice to me.
Okay.
Hmm.
So in that case, whatever is the actual cost of the manufacturing of that medicine, you will be reversing it. You have to reverse.
So
if valuation is not available, then it has to be done.
No. So it's not about, I think, valuation not available. So
See, because what happens is the actual transaction would happen 3 years or 5 years back. And now when the goods have been sent back after 5 years, again the valuation per se also there's going to be certain issues which may crop up actually.
Yeah, so Kuber, now I am of the view that 5 rupees ITC has to be reversed even after the financial credit note situation.
So it depends upon what ITC you have taken on the goods. If it is a original, if it is a first sale,
yeah.
If it is a first sale and you have taken ITC of only 5 rupees, then 5 rupees has to be reversed. And if it is again invoiced by a distributor, then you have taken 90 rupees ITC, then 90 rupees has to be reversed. It is depends upon what leg you are in. If it is a first and you are just received you should have financial credit note and you are not taken there is no one more invoice, then the original ITC should be reversed. If it is
right
invoiced by the distributor, then 90 rupees has to be reversed.
Yeah, I agree with this view. So the reversal would arise irrespective of the credit note being financial, non-financial, irrespective of the timeline at which the goods are coming back.
But at what value were you discussing? I just missed it as such.
No. If the goods are coming back by way of a tax invoice, that means the distributor is raising a tax invoice for 500 plus 90. So manufacturing is, for a manufacturer to say, new inward supply which is being destroyed, so it is at 90. But under financial credit note, it would be 5 rupees reversal.
Yeah. I am agreeable with that. Yeah.
So, Venu sir, in this situation where tax invoice is issued by distributor to the manufacturer, say at 90 rupees ITC, so the manufacturer will first avail it and then reverse it.
Yeah, and Jatin sir is rightly pointing that how can there be different processes of return and which is altering the transaction. Either it has to be by way of credit note or tax invoice. Can there be a tax invoice for the sales return? That is where we are now moving towards.
Oh. So, okay. So, okay, let's just finish this part. Assuming the distributor is issuing tax invoice to the manufacturer. So, manufacturer will first avail this 90 rupees and reverse it, correct? No? And what happens to that original 5 rupees?
With a new tax invoice?
No. See, new tax, you forget that original ITC of inputs, what it took, 5 rupees.
When I issue a credit note, I will have to reverse the...
No, we are talking about tax invoice situation now.
If it is a tax invoice, the original transaction is nullified. So I am buying a new goods. So what is being destroyed is the new goods which I am purchasing.
Is that correct?
That is where the question is. The same transaction.
So, and what if it is like a service, what Mylar and Kuber proposed?
That, so that I don't know.
So, yeah, I mean, you
because I'm not still aligned to think it as a service.
So
if
we'll have to address
service,
issue of two ITC parts, the new
if it is
supply
exactly,
and
so
the older one.
Correct.
Fresh supply, we have to address two questions.
So if it is the moment, if it is a service, then there is no question of reversal of 90. In all the situations, it is only reversal of 5 rupees.
Yeah, only if it is a new supply is a goods, then this question comes up.
Correct. So I don't know, everyone Okay, Abhishek, now we have exhausted with our talk.
We are just lost. We really wish Jatin sir's
I know,
internet
sir, I
comes
know.
back.
So can we continue this again this
Honestly,
next week?
I am happy Jatin sir's internet is not there. Otherwise, I wouldn't dare to talk so much. At least I know sir is countering it, but if Jatin sir
Sir,
says,
can you
then
just
that
check
is
if your
a
internet
law.
is
It
back?
becomes a law. So coming to the law will happen only when people debate and give the different views. So that doesn't mean, sir, I don't want you to be there. But I'm just saying. But Abhishek, now a sincere request. I want you to make a concrete view. Have a discussion with Jatin sir whenever sir is available, and come back with that article for us to read as to what is the thought process. See, none of us are judges to give the judgment. So you will still give your view, and in your view, you negate both the answers. Why not this way? Why not this way?
Certainly, sir.
The requirement of the study group is only to present all the views that are available. It is not to only ponder about only one view.
Certainly, sir. Certainly.
So
I'll do
to
this within a week only.
summarize, Abhishek, probably 3 scenarios. First,
Okay.
if it comes back as a credit note, what classification, what is the implication of ITC?
Annapurna,
Second,
even before that, how should it come back? That is also first thing to be addressed. How at all it should come back.
Correct.
Document
So
wise?
it will emerge in either of the 3 ways, no, Venu, sir.
Correct.
One
Correct.
by a credit note.
I don't
Again,
know.
if it
Maybe
is
fourth way he will come back because transaction money.
Okay, so credit note, again, if it is a credit note, if it is a GST credit note and financial credit note, the third situation would be if it is an outward supply from the distributor, whether it should be goods or whether it is service. In such a situation, what happens to the fresh ITC and what happens to the original ITC by the So these are the questions we are confronting now.
What I will do, I will just share the question first in the group. Please do vet that because then it will be easy to conceptualize it, and then I will
Then
go to
probably even the HSN also you can
HSN. Yes. Sir.
discuss on that along with the rates, probably just to understand the implications.
Then,
So
sir, I'll do it in a week.
you will have 10 illustrations to present, Abhishek.
I'd love to experiment it.
So continuity of the session.
But good discussion we had.
Yeah. Thank you. Thank you, everyone.
Thank you so much. Thank you so much.
Thank you.
Thank you all.
Thank
Bye
you.
bye.
Thank you.